Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Chuck Mack, head of U.S. equities at Nasdaq, for an update on Nasdaq's 2021 equity and capital market strategy. Chuck, it's great to see you as always. Welcome back to Trade Talks.
Thanks so much for having me, Jill.
And we have seen significant growth in interest from retail investors. What is Nasdaq doing to support that segment in the marketplace?
Yeah, like you said, Joe, I mean, over the last 12 months, it's one of the biggest stories, if not the biggest stories in the markets. And we've seen not just a simply retail growth from the retail investor, but it's like a new generation, the next generation of investors coming into the market, which is a great thing. And so we're really excited for that. But we also feel like it's important to make sure that these investors have the right tools at their fingertips to make the right investing decisions. So broker-dealers generally do a really good job of providing good education for these individual investors. But we're dipping our toe in the water there to complement what the brokers already do. And so we've launched an education platform for retail investors. And from an exchange perspective, from a trading perspective, we always look at and think about what's the best way we can bring a diverse set of buyers and sellers together. And so we'll be thinking about how can we better serve this segment from a trading perspective. So maybe there'll be another Trade Talks on that topic.
And Chuck, what about trends in the exchange traded product or ETP space? It seems as if new product is rolling out all the time for retail and institutional investors.
Yeah, there certainly is a ton going on in the exchange traded product space. And I'll kick off just by noting one interesting data point. In the first 2 months of 2021, $155 billion flowed into exchange traded products. That's more than double the same period the previous year. So obviously it's a growing product space, and it's got plenty of legs underneath it. There's a lot of interesting things going on there. I'll mention three at a high level. One, we're seeing more and more interest in ESG products, and this is no surprise. More and more companies and funds are looking at the impact ESG has on various companies and their operations. And this is still an early inning, so I think we'll see a lot more there. Second, we're in the early stages of actively managed funds using the ETP structure. So about 2 weeks ago, we had a great new listing that was a semi-transparent, actively managed fund. It was a real estate fund from Alps. And again, we expect to see more of that to come. And then third, I think this is probably the highest level one, is there's just so much more choice. We're seeing so many different themes in the space and thematics, as some of us refer to, whether it's ESG, as I mentioned, a particular market segment, a particular technology, a digital currency, for example. All those things are creating this great choice for individual investors, and it gives them this streamlined way to get into the areas they want to be in and balance their portfolio or target their portfolio whichever way they see fit for their savings.
And another thing we're following closely is capital formation and how it continues to evolve. What are some of the trends, and do you expect them to be in place for the long term?
Yeah, it's a great question. So there's a lot of really interesting things going on, and I mentioned the next generation when we were talking about the retail investor space. I think also what you're seeing here is the next generation also bringing to market lots of new business models and companies, whether it's ride hailing apps on your phone, or hospitality apps, or whatever it might be. You're seeing all these new businesses being driven to market by that next generation. And along with that, you're seeing different ways to become public. I mean, I don't think at least in the history I've been in this industry, I haven't seen so many choices be available to the public companies that are coming to market. The traditional way an IPO is done, they hire an underwriter, a group of underwriters, and they go and work with institutional buyers to gather interest in the security. There's a primary transaction the night before it goes on the exchange, and then there's a an IPO auction on the exchange to begin secondary trading. So that, I don't think that'll go away anytime soon, but that's sort of been the more traditional track. What we're seeing more and more of lately is direct listings, where a company will come public and they don't have a need to raise capital at that moment. And so they'll come to the exchange. They won't have a primary transaction the night before. They'll just kick off secondary trading with the IPO auction on the exchange. And I expect that to be a trend that will continue. And then a twist of the lemon on that one is where they combine the capital raise and the secondary IPO auction into one on the exchange. And currently, none of those have occurred because there's no rules. And so we filed rules with the SEC that we're hoping to get approved soon. And I think you'll see some companies take advantage of that. And then the last one I'll mention is what are known as special purpose acquisition companies, or SPACs, which has been really big. It's been massive this year, a significant trend. And what they do is they don't have operations. They're just pulling together funds, and then they go out and hunt for the right company to bring public. And the reason why a company might want to go that route is because the SPAC organization does all the hard work when you're ready to go public. And so it's kind of streamlines the process for these individual operating companies. So I'll end where I started, which is to say, these companies coming to the public markets have more choice now than they've ever had.
And switching gears to the institutional vertical, what changes have been made to the opening cross, and give us an update on MELO?
Yeah, sure. So, one of the things that's really top of mind for big institutional investors is just making sure they can find liquidity. And with the opening cross, I think it hasn't historically been a real institutional focused event. It's really been a retail event. It's a lot of orders coming in from individual retail investors that are kind of setting the order and going to work or whatever it might be. And so there's a pretty big auction at the beginning of the market, but it's not significantly institutional in nature. And so we're making a bunch of changes to make that more flexible, to make it more accessible to big institutions. So then we can marry those two pools of liquidity together. And then if we get it right, and I think we will, we'll end up with a better open, which will increase market quality for all the parties involved. And then you asked about MELO too. So along that theme on the institutional side, we do continue to see more and more solutions for them that are very specialized, whether it be a specialized platform or order type or what have you. But the focus has generally been on how do we find that liquidity, but limit market impact. And so that's why we designed MELO a while back, and it's been very successful, and we're watching it grow, and we're very happy with it. But I would say we'll continue to invest in that area and grow that product and diversify it further over the next year or so.
And finally, Chuck, what changes do you expect regarding SEC oversight, and how do you plan to work with the Biden administration?
Yeah, it's funny. If you asked me that question 6 months ago, I'd probably have a different answer than I do now. I mean, there's been so many things going on in the market. Certainly, when Gary Gensler, the new chairman, comes to the SEC, he's going to have a lot of things on his plate. Probably some of them not the things he expected on his plate. But historically, we've had a great working relationship with the SEC, and I expect that to continue. I'm looking forward to really a more productive dialogue with the SEC and the industry as we, not only focus on maintaining all the, really high quality aspects of our market, but also evolving it, for the next generation.
All right, Chuck, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much, Jill.